Hey everyone, welcome to Crypto Data. So today we're going to cover some tax questions, but first I just want to go over an overview of the market, and then I'll cover what a lot of people are wondering about since tax season is almost over. So looking at the market right now, we see Bitcoin is up about 4% to $8,269. So it has extended its gains from yesterday, which is definitely great to see, along with a lot of these other coins that have extended their gains. Most coins are up double digits today. And it's great to see, everything is still bullish. And looking at the chart here for Bitcoin, I expect us to continue to a slight bull run and maybe consolidate in this level before we do have another pullback. So I'm expecting maybe a pullback to 82, maybe even 8,000. I drew the support line here at 7,500. But again, hopefully we don't get there. But yeah, we have had quite a good run the past couple of days. So it'll be interesting to see exactly how much more we do have for bullish rise until we have a pullback. So the big question everyone's been wondering about is, will Coinbase report my Bitcoin gains to the IRS? So as you know, in the United States, tax season is almost over. In 2 days, it's going to be over, and everyone's still trying to file their last minute taxes. So again, before I start this, I am not a tax professional. This is not professional advice, financial advice, just my opinion. So please don't take any of this and do your own research beforehand. But reading this article here, it came out today. It's by the Motley Fool. And basically it talks about the IRS wanting to crack down because, they know that there's been a lot of profit made in cryptocurrencies. And they want to make sure there aren't a lot of tax evaders or basically people, getting away with just free profit, which is still a controversial subject. But basically it talks about last year how the IRS was filing a lawsuit that would force Coinbase to provide information on its users from 2013 and 2015. Basically, when Bitcoin had a lot of its rise from the start. And basically, Coinbase was saying, that was an overreach for the IRS to get that information because, their customers' information was private. So what the IRS said was, okay, we'll scale back that. And instead, they wanted to grab all information on Coinbase users who had conducted transactions involving 20,000 or more within a single year between 2013 and 2015. So they just wanted to focus on the highest profile cryptocurrency users, which would have the greatest potential tax liability. So Coinbase did, last November, they did end up complying with the IRS's request, and they turned over records on over 14,000 users who met that $20,000 standard. Now, again, from over the 6 million customers, only 14,000, that is a small amount, but it's still people who, wanted their financial privacy through cryptocurrencies. It kind of, was like a slap in the face for them. So those users were turned over to the IRS, and then that begs the question, so what does Coinbase actually report to the IRS if you do have an account on there? So what many people don't know is Coinbase was actually already complying with the IRS rules. And basically, the rule is if you've received at least $20,000 in cash for sales of cryptocurrencies, or you have at least 200 separate transactions in a calendar year, then a Form 1099-K gets sent to you with the IRS also receiving the same information. So again, if you got this Form 1099-K, I don't know, I believe it's either an email or it'll be on your account. But again, if this gets sent to you, know that the IRS also gets a copy of this. So if you've had over $20,000 in sales for cash or over 200 separate transactions in a calendar year, then you most likely receive this form. Now, it says if you're a long-term investor and make relatively few transactions, then you're unlikely to reach the 200 transaction mark in any given year. Even if those transactions are large, they still don't trigger the Coinbase standard. So again, you either have to sell it for cash of over 20,000 or perform over 200 transactions in a calendar year. But it says, however, if you use Bitcoin for everyday transactions, then you're more likely to have that activity reported to the IRS. First adopters who've embraced Bitcoin as a way of doing commerce rather than simply as an investment will find that they're more likely to receive tax reporting information from Coinbase than long investors are. Now, talks about here of how Coinbase is trying to make tax reporting easier. So if you've gone to their website, you actually notice that if you go to their tax center, so log in, go to tools, and then go to tax center here, And then they have made some forms for transaction history and a gain loss calculator. Now, again, this stuff's still in the beta phase. I tried using this. It wasn't too helpful. It's just a lot of jumbled up mess. You have to format it and everything. It comes into an Excel format. But again, it's something. So it'll kind of give you a general idea of what you bought, sold, profits, losses, etc. So just go to this, kind of mess around with it. I'm sure they're still trying to make this better, but at least they are providing something. So it says here, basically, the report includes the summaries of purchases and sales. And then Coinbase's report, it mimics to some extent what stock investors get from their brokers on the Form 1099 Bravo. Now it says, although the company does not send a copy of the report to the IRS, as people are required to do for stocks. So again, Coinbase provides this form. It's not the same form as people who trade stocks get, but it is similar. And basically, it says from there, Coinbase isn't yet reporting most information on cryptocurrency gains to the IRS, but there's a good chance that it will in the near future. Some users of the service who get the 1099K forms will have to make sure that their tax returns reflect the activity indicated on the form. So make sure that matches up with what you're reporting for taxes. And it says, moreover, if the IRS gets in the way, then tax reporting on cryptocurrency transactions could get a lot broader in the years ahead. So as you know, I believe the buying and selling, of different coins, transferring different coins, I believe those weren't taxable for 2017 taxes, but for 2018 taxes this year, they will be. So it's just a lot of stuff going on there. But as far as reporting is concerned, and my opinion on what the best way to do it is whenever you sell something for cash, say on Coinbase or anywhere, always put at least, I would say, 30 to 35% just away, depending on, how much you're making, your tax bracket and everything. But if you put 35% of your profits away in a savings account or just somewhere where you won't touch it, that's probably the most that they're going to take from you in taxes from that profit. So as long as you have that sent away and don't touch it, then you can be pretty sure that that you'll have the funds available to pay taxes come around next year. So that's just my opinion and something, I'm trying to do to stay safe. Again, hire a tax professional, someone who's really well-versed in cryptocurrencies. It's still a new space and there's still, a lot of uncertainty in it. But if you hire a tax professional, then you can be sure that your taxes are going to get done properly and everything will be reported accurately. So you won't have the IRS on your back. So again, I know a lot of people, haven't reported taxes this year. For last year, I think they said based off of 250,000 users from Credit Karma, only 200 of them have reported cryptocurrency taxes, which if you think about how many people in the world are in cryptocurrencies, 5%, that 200, could be, a little bit more people than that do have those gains to report. But again, there's still, very few people reporting taxes. So try to get ahead of it. Try to start keeping a record of all your trades, especially your profits and losses, because those will help you out come next year when you're reporting taxes again, which I'm sure cryptocurrencies will be a hot topic for next year's taxes. So just start tracking that now so that you can be ready for it next year. But yeah, if you did get a Form 1099K, most likely, that's sent to the IRS as well. And just expect that if you are doing high volume transactions. So just keep that in mind. Basically, I just wanted to, kind of give a overview of how taxes are handled this year and kind of, open up everyone's mind to what Coinbase is reporting and kind of what the IRS is trying to get. So with that, I hope this video helped you out. If you do have any questions, please leave them in the comments below. And if you like the video, please give it a like and subscribe if you haven't. Until next time, thanks for watching.